Hey traders, welcome back. I've been wanting to do this video for a little while, and I think now is a good time to do it. I've titled it The Number One Thing You Need to Succeed as a Trader, and I'm going to do two or maybe three of these. And the reason that I'm going to do multiple, the number one thing you need to succeed as a trader is because I just found over time as I go to workshops or mentorships or mastermind groups and I talk with other traders there, we'll leave those training sessions and I'll say, man, this was life-changing, this was awesome. And they're like, yeah, it was great. But what was life-changing for them was different than what was life-changing for me. And I've just found that everybody has different epiphanies in terms of what can be valuable to them as a trader. And so I'm going to do a couple of the number one things that you need to succeed as a trader. This is probably part one, and then we'll do part two or maybe part three. But one of the things that I wanted to share with you that I think I've seen a lot lately and needed is the fact that you need to find what works for you. So we have spent a long time, you guys have probably seen this page many times. We update our performance of all of our strategies that we use inside of our live trading room. We update them every week. Our results simply cannot get any better. That's not a boast. It's just a mathematical fact. Our results cannot mathematically get any better than they are. They can only get worse. We're just about knocking it out of the park 100% of the time on our trades. That's not, I don't think, because we are amazing traders. I don't think that's what's going on. I think that we have just found an approach. We've found a groove, if you will, in terms of how we trade. And I want to share that with you so that even if the way that we trade in our trading room, it doesn't jive with what you like or what you're trying to accomplish as a trader, you can use this template, you can use this format to find what works for you, okay? So the thing that I always like to stress is that I think it's important in the market to remember that there is more than one way to skin a cat. This market is such a crazy place. We talked about this today in our live trading session where, you know, you could be bullish on IBM. I could be bearish on IBM. And we could both apply our thesis to IBM today. And regardless of what IBM ends up doing on the day, both of us could end up making money, just depending on how we structured that trade. And, you know, that's one of the cool things about the market, but it's also a challenge in that I don't think there is one right way to go about skinning a cat. I don't think that there is, you know, a way where you say, hey, it's my way or the highway. This is the proper way to approach making money in the market, and everything else is not worthwhile. There's a lot of ways, and I think a lot of it is just finding what you feel comfortable with and what makes sense to you. So I just want to give you some tips that have helped me in that process. And the first thing is in terms of finding your unique groove as a trader, finding what works for you, finding what you feel comfortable with. So many of you know I've worked with Robert Kiyosaki, training his stock market students for many years. I've worked with over 1,000 different new traders, learn how to trade the markets. And through Robert, I was able to meet Tony Robbins, and I was able to train Tony Robbins students in his stock market program. And of course, Tony Robbins is huge on mirroring and modeling. So, you know, his approach, if you're not familiar with it, in a very simplistic sort of explanation is, you know, figure out what it is you want to accomplish, find someone that has already done that and is already successful at it, and then mirror and model them. Just follow what they do, how they do, when they do, and why they do, and that's the quickest, most proven way to success. And so that's kind of what I've done with my trading as well. I would see people trading strategies and approaches, and you guys know how it is. It will either immediately, you know, what they're doing and the philosophy behind it, it will immediately appeal to you and you'll like it and it will make sense to you, or else you're just like, man, that just seems wrong for some reason. And it just varies. But you need to seek approaches that I find the first impression is the right impression. If you really are having to work and study and analyze and go back over and over again different approaches or strategies to understand them or to have them quote unquote make sense to you, it's probably not a right fit for you. And so again, mirroring and modeling people. And I'm going to give you two names of individuals that I have spent a lot of time mirroring and modeling their approach. These are two individuals that when they talk about how they trade, I'm just like, you know what? That makes perfect sense. And that's what I was wanting to do anyway. You just articulated it a lot better than I could. But what you're already doing is exactly what I wanted to do. And so again, you want to find an approach that works for you, that you feel comfortable with. And one of the approaches that I want to talk about here, well, there's two individuals that I want to talk about. One is Mark Minervini, and the other is Adam Mancini. And Mark is a trader that has proven his worth over the decades and decades and decades that he has traded. He's been around as long as I have. I think he's been around 35 plus years as a trader. He's won a lot of trading contests. He's made a lot of very prescient setups in the market when we had changes of direction, bearish to bullish, bullish to bearish. Basically, he's just proven his worth over time as a trader. And one of the things that he always says is that those who make forecasts, while those that trade make money. I don't make forecasts. Now, that may be meaningful to you, it may not. That was huge for me. That was absolutely huge for me. This idea that traders that make money don't forecast. And you can't get on social media, you can't get on Twitter, you can't get on CNBC, Bloomberg, you can't get on any financial website out there without some quote unquote expert giving you their forecast of where the market's going or what's going to happen in the market next. Jim Cramer every day talking about what's going to happen in the marketplace. And to me, it's just it's insanity, really, what it is that he is doing and what it is that they're talking about, because no one knows. No one knows the future of the market. And so I love this idea that 1% of our population is just extremely successful, and 99% is just kind of muddling along. And so if you want to be extremely successful in trading is probably the same way. 1% really, really knocking it out of the park. The other 99% just mulling along. You need to do what the others are not doing. You can't do what the masses are doing. If you do what everybody does, you'll have what everybody has. And that's the definition of average, the best of the worst of the best. So you have to be a 1%er. You have to be this tiny minority. And that requires doing things in a different way. And so sometimes the more educated you get, the more uneducated you sound to the 99%ers. People will ask me all the time, what do you think about the market? I don't know. I thought you were a full-time professional trader. Yeah, I don't know. Well, do you think we're going to keep going down? I don't know. No idea. No clue. Well, do you think we've reached a bottom yet? No idea. What do you think the Fed's going to do next? Do you think we're going to still have another 75 basis point bump the next time around? No idea. No clue. And they just start looking at you like you are an idiot. But I purposely buy into this theory. I believe in it. I don't make forecasts. I don't make predictions about where the market's going. I don't buy software that tries to help me predict what the future is going to do. I just simply stay away from that. That was a huge mindset shift for me. So Mark Minervini, if you're not following him on Twitter, man, you should follow him. Stuff that he says, it's like trading gospel. Okay. The other one is from Adam Mancini, and Adam says a forecaster is concerned with mapping a price path. You're concerned with figuring out where something's going to go, right? A trader has a lean one way, so you might have a bias, you might have a bullish bias, you might have a bearish bias, and you might have multiple scenarios in mind. Okay, if this happens, if the Fed does this, maybe the market will do this. So you've got a lean. You're leaning one way or another. You might have multiple different scenarios in mind. If this happens, this might be the result. If this happens, this might be the result. And you're going to have a plan to trigger on each one of those, reacting in real time to whatever happens. But he says, I have never personally met a profitable full-time trader who is not the latter, okay? Meaning that you are concerned with mapping out a price path, okay? You can have a lean, but multiple scenarios in mind, have a plan to trigger in each reacting to whatever happens, okay? You have got to be that kind of a person that just reacts to the market rather than forecasting the market. So we talk a lot about we don't predict, we react. And that's a big, big mantra for us in our trading room. So both of those things have allowed me to sort of develop my approach. And again, if you're not following Adam Mancini on Twitter, I would definitely follow him as well. Everything that he says makes a ton of sense to me. So for me, what that has done as a trader is it's allowed me to sort of find my groove. And when I say find your groove, I've mentioned this many times in our trading room. I have a trading friend that lives a very Spartan lifestyle. He has no debt, no personal debt, and he day trades individual shares of highly volatile stock. So he has a big issue with paying commissions. He does not want to pay commissions. And so he trades shares of equities because you don't have to pay commissions on those. That's a big thing for him. I pay so much money in commissions, it's crazy. And then he day trades these individual shares. So, maybe if he's trading Twitter, he might be trading 4 shares of Twitter at a time, or Tesla, something, Amazon, a big company. He might be trading 4 or 5 shares at a time. And he day trades those shares all day long. And he consistently makes about $500 a day, which is way more than he ever needs to live the lifestyle that he desires. And he's incredibly successful, and he's got a slick system, and it's great for him. And I look at it and I hate it. I hate it with a passion. I would never do it. It's just not for me, right? So when I say find your unique groove as a trader, find what works for you. And what Mark and what Adam say and preach was what resonated with me. So number one, I am strategy agnostic. And what I mean by that is I have no preference with strategies. Anytime I hear anybody say, we trade butterflies, we trade iron condors, we trade this, we trade that, we do this, we do that, I'm just like, you're destined for failure. You are destined for failure. And you might say, well, that's pretty arrogant of you to say. You don't know what their results are or what they're going to be. But I will tell you this, I know for a fact they're destined for failure because there is no one single strategy that works all the time in the market. Lately, we have the best example. Last year, 2021, best strategy, bar none, that you could do. Just sell puts on tech stocks. Just sell puts on tech stocks. You were going to make 5% a week. You were going to make 20% a month. You never lost. It was like clockwork, right? Well, that's the worst strategy for 2022. This market, this bear market that we're in, obviously selling puts, not a good approach, right? Doesn't mean that selling puts is a bad strategy. It just means that it has a place and a time. Now is not the time for that strategy. So we're not tied to any one individual approach or strategy. If we're trading a zero DTE, if we're trading whatever setup it happens to be, we will and do use everything you've ever heard of under the sun as far as the setup goes. We will do directional trades, we will do debit trades, we will do credit trades, we will do spreads, we will do it doesn't matter what it is. We have no bias. And that allows us the flexibility to be able to trade, hopefully, the right strategies at the right times. Gives us better results. Number two, the other thing that I've gotten from both Mark Minervini and Adam Mancini is I have no directional bias. I don't care what direction the market moves. I see so much pain and anguish out there on social media today because the market is in a bear market. And for us, it hasn't meant anything. It does not matter to us as traders what the market move is, whether it's up or down. In fact, we would actually probably prefer it to be down. We usually get better IV, we get better premiums, and you get bigger moves and more volatility, which is all what we want as traders when markets go down versus when they go up. So if the market never ever went up again, I would be a happy camper. That would be fantastic. But I don't care. I have no directional bias. It doesn't mean anything to me whether the Dow is up 800 points in a day, down 800 points. And I trade the strategies accordingly to that sort of idea. I trade levels to levels. This is a big thing that Adam does. I am not interested in predicting where the market is going, but I can certainly tell where a definitive support level is and a definitive resistance level is. And when it breaks above that resistance level, to me, that's a bullish bias. And when it breaks below that support level, that's a bearish bias. And anything in between those levels to me is chop, and I trade that in a specific way. So I trade levels to levels. I'm not trying to predict where the market goes. I trade based on my support resistance lines. We spend a lot of time in our trading room talking about support resistance. We build trades to be dynamic, not static. If most people were honest with their trades, they would have to admit that no matter how much research they do, ultimately they put their trade together, they put that trade, that money on the line, and then their trade becomes this. Their trade becomes buy and hope. They literally are using a strategy called buy and hope because that's what they're doing. They sit there in a static trade, and if the trade works, they make money and everything is hunky-dory and they look like a genius and they're happy. But if the trade doesn't work, they're going to use stop losses because you got to manage your risk somehow, right? And they use stop losses to manage that risk. So if the trade doesn't work, they get kicked out at a loss that they have predetermined beforehand is an acceptable loss for them. But it is a very binary, static trade. It either works or it doesn't. Every single trade that we enter, we assume that we're wrong. We assume, number one, that we are wrong in our assumptions on the trade. And number two, we assume that that trade is going to be fluid and that it's going to move up and down in price and that it's going to fluctuate and that we are going to mold and shape and move and adjust our trade with the market. We are going to trade dynamically, not statically. We are going to adjust and manipulate our trades as we go along. We start with a small amount. We scale into the trade over time. We adjust, we hedge, we protect, we alter. And we do all of these kinds of things to manipulate the trade. I said earlier here, if you look at, let's see if we can get this to actually work here, on our results of our 0 DTEs here, you can see that we've had about 117 total trades this year in the 0 DTE category. 114 have been winners, only 3 have been losers. That's awesome, that's great, but I'm going to tell you right now, probably 45 of those 114 winning trades would have ended up in a loss. If we would have traded it statically, just used a stop loss and said, hey, if it doesn't work, we're going to get kicked out of a loss. We had to work those trades. We had to manipulate those trades. We had to get in and adjust and hedge those trades to make them make a working trade out of it. So I trade dynamically. We are always adjusting. We are always manipulating. We are always altering. We are always changing our trades. That's why we have this success rate. Not because we're amazing traders, but because we understand that the market's not static. So why would you do a binary static type trade? You should be dynamic in your nature. And then last but not least, a part of that is we do not absolutely use stop losses. I can't think of anything that is worse for a trader trying to be successful. When I was on Wall Street, we never used stop losses. There's a reason professional traders don't use stop losses. It doesn't mean we don't manage risk. Here's the key. You got to get out of your head that stop losses are synonymous with risk management. Those two things do not have anything to do with each other. We're huge on risk management. We are absolutely huge on risk management. This is the number one thing that you need to learn as a trader is to manage risk, but stop losses are the worst way to do that. A stop loss guarantees a loss. That's the number one thing that a stop loss does for you, is it guarantees a loss. I'm not interested in anything that guarantees a loss. There's got to be a better way to manage your risk, and that is building a dynamic trade, not a static trade. Building a trade that doesn't need a stop loss, because when you hit that magical level that you were going to get stopped out at, you fix the trade, you adjust the trade, you manipulate the trade. So these are all things that I've gotten from Adam. These are all things that I've gotten from Mark. They're two people that if I were instructing a new trader, I would say, man, these are two people to model. These are two people to mirror with your trading going forward. And I think it will give you an approach that you feel comfortable with, that you can like, I don't know, maybe those things that I just listed here, maybe they resonate with you, maybe they don't. I don't know. But if they do, you're absolutely welcome to come join our live trading room. You can absolutely join it for no risk. And there's a 200% money back guarantee if you do join in your first month. If you don't think it was absolutely life-changing, we'll give you 200 times back what you paid, 200% back what you paid in your first month's subscription to the program. That's how much we believe in what we do and how we approach our trading. And again, without patting ourselves on the back too much, I don't think you're going to find a track record anywhere out there that even is close to resembling what we've been able to accomplish. And it's, again, not because we're amazing traders or anything like that. It's because of the approach that we use, and it is a unique approach. So I will leave a link in the description box if you want to sign up for a free week's access to our live trading room. Give you a link to what it takes on your part to get a double your money back guarantee. And we would love to have you in the trading room. So hopefully that's helpful for you guys. I'm going to put out another one, maybe two of the number one things that you need to do to be successful as a trader. But hopefully this one resonated with you. And if it didn't, hey, that's okay. Maybe the next one will.